What'd you think about the Fed meeting today? Raise your hand if you thought it was bogus. I did too. By now, I'm pretty sure everyone has heard about Rosengren and Kaplan, the Fed members that have been taking million-dollar plus trades in 2020, and then coming into now, they're selling it into cash or index funds because of ethical concerns. Well, Jerome Powell in today's meeting was asked if any board member knew that this was taking place, and just look at his response.
So these, I don't need to tell you, people file these reports annually, and I think they were just quite recently filed for 2020. So I don't have any reason to think people at the board would have known about particular trading that's going on. They will see that there are people at the Fed who see that, see the trading reports when they're annually filed.
It was like he was thrown off guard by the question that everyone knew was going to be asked. That's not why we're here today. We're not going to talk about this too much. We're going to talk about whether or not the stock market's going to continue to fall or if it's going to be recovering and what we have to look at in order to know if it's going to continue to see pressure. I tell you one thing, yeah, we saw a big day today in the markets, up 1% pretty much on each of the indices, but there's still some red flags out there, and that's what we need to discuss on today's episode. Let's hop into the computer. All right, welcome to the computer. For those that are new here, welcome to the Stock Market Brief Show. Consider subscribing and smashing that like button. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. And we're going to talk about some red flags today, some potential opportunities, and what we really need to watch out for. If you watch yesterday's show, it's all going to be kind of intertwines with one another. So let's just hop into the first chart. Volatility is still relatively elevated at this particular point. Yes, it got crushed down today, but that makes sense because it was a gigantic move to the upside. What do we see going on here? Potentially wedging right here. It's not for certain. This could continue to press down as volatility pushes further and further down. It could get overextended to the downside, resulting in a pop to the upside, and that increases fear, obviously, in the market, or that's just a simple way to look at it. We still have 1, 2, and even 3 gaps beneath us. You can see here that this gap was recently filled on today's action. Now, if you look at the daily time frame, right, yeah, we popped off, right, boom, and we hit this upper trend line of the daily, this daily resistance on the daily chart. This resistance here on the VIX, and it got very overextended from the Bollinger Band. So yeah, we're coming back within this. So the middle of the Bollinger Bands, where you can consider that the mean, reverting to the mean, is the 20-day moving average, and that would bring us to 18.85. So that would make sense to come revert back to there, which can press the market up higher, and we'll get into the S&P 500 here shortly. But I can tell you one thing right out of the gate, it hasn't even filled its gap from the other day. So it's not like we're just out of the woods yet, right? You need to be patient. I say that frequently. You got to be patient in these times. Now, take a look at the NIAD advanced decline line. I wanted to just call out that today we're getting, we look at this, I look at this for overextended to the upside or overextended to the downside. Look at, we had not even that big of a move. We had a big gap up today, right? And some follow through and then got sold into a little bit. But we're getting an oversold reading here at around 2,000. And when we get those readings, sometimes it can reverse. So just be mindful that, hey, if we get a gap up, it could be sold into potentially. All right. Now, what also is scaring me, that's a big red flag, is look at the dollar. I mean, you got to pay attention to this. The dollar has had this inverse correlation with the S&P 500, and it was down on the day, but as soon as the Fed started talking, it got super volatile, but then all of a sudden, towards the end of the day, it went pump, 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 right back up into this area of resistance at about 93.50. It closed at 93.46, and that is a big confluence of resistance as we're still just holding in that area right now. And you can see these blue vertical lines on the screen. You'll be like, what are those? Let me show you what those are. When we get a spike up in the dollar, you can see here if the dollar falls, the S&P 500 typically rallies. All right, now we're sitting at this point where we're at a very interesting area on the S&P 500 as we crack down through this specific trend line, which we'll get into, and the dollar is here at resistance. So if the dollar starts breaking out, that could be detrimental to see the equity markets continue to press lower, as well as various commodities. And if you really take a look at the dollar on a longer term chart, if this starts breaking out of that 93.50, this level, and we've been tracking this inverse head and shoulder pre it breaking out, right? And you know, it broke out, it came back tested, now it's up here. If we there's nothing in its way, right? There's nothing there blocking it to make it just go fly to 95 to 96. So that is not a good thing for the equity markets to see a big fast move in the dollar, as we've already been seeing that, okay, when it peaks out here and then falls, equity markets rise up, right? But also, when the dollar, like right here where we called out, bounces, what happened to the S&P 500? Boom, to the downside. Now, these are short-term correlations, and correlations can change, all right, and let the market digest what the Fed just took, what just happened. But, you know, this is one of those red flags that we just need to be very mindful of. Let's quickly look at the TLT. Also, these are also pumping up, I mean, not that much on the day, but, you know, almost 1%, 0.5%, right around there. And we're still below this 152, this previous resistance. And sometimes when it gets up to these levels and you see these strong moves to the downside, that actually helps project the S&P 500 up further. So it's not a necessary, like a for sure thing. But if we do start seeing this fall, we might see the S&P 500 continue to bounce into potentially its next area of resistance. And if this continues to break out of this symmetrical triangle, the target is still 156, and it's still on its way right there. It looks healthy so far. If you look at the yield, the 10-year yield, this is unchanged. Nothing to report here. Just know that if you hear me say it, contraction leads to expansion, right? Expansion, tighten, coiling up, contraction, once it breaks out of these levels, it's going to lead to some type of an expansion, so explosive type move. Now the S&P 500, we cracked through this rising wedge. Okay, that's a big technical breakdown. We did not fill the gap yet. We got overextended from the lower Bollinger Band and we bounced. We're still above the 100-day, but we're still below the 50-day. So this is still something that you need to be very patient with. You need to be careful. Don't try to be a hero, and I'm going to show you another chart here in a moment to show you just its implications. Now take a look at the PPO. The PPO is pretty much heading completely down south. We have the histogram uptick slightly, so you want to see this start curling back up, okay, and getting some strength here, recapture the 50 and some of these moving averages there. Overall, the long-term trend still looks really nice, especially on a weekly time frame. But if you take a look at this, you can see this is about a year's worth of a channel that it's been ping-ponging around in. And if you're wondering what all those gray boxes are, those are all unopened gaps. And I wouldn't be shocked to see gaps eventually filled, but that, just imagine just how look how the market has been acting with a 5% pullback. Could you imagine what the market would be doing and how everyone would be acting? And oh my gosh, it'd be crazy if we fell from 4,300 down to 3,200 and filled this area right here. Holy heck, it'd be Armageddon. It would be absolutely just mind-boggling crazy. But I want to call out that when it breaks this channel, that has technical implications. It broke it here, quickly recovered. So the bulls need to quickly recover here, or we can be doodling around for a while. And now keep in mind, what we can see is potentially a back test, and a back test doesn't mean it recovered. A back test could just signify that this support is now resistance, and then it starts breaking down lower, and then you have a trend that goes from higher highs, higher lows to lower high, lower lows, and then all of a sudden things get very interesting, right? 15-minute time frame on the SPY we talked about yesterday. We're going to quickly go into this, and then the other red flags to keep an eye on. So we called the bull flag out. It broke out. It's still in a short-term downtrend. What did we say? I wouldn't be fading right here, but you can fade the market when it comes into the 5-day. It came into the 5-day, started fading. Fed meeting, shot all kinds of volatility around everywhere. I don't like trading too much into these. I took a very small position in Facebook at the close of business, only because, hey, if it's going to rally up, it could be a significant move, and my risk is relatively small, as it got just completely clobbered. We'll get into that here soon. But yes, 5-day is still declining, and price action closed back below it. Take a look here. This is the same chart, okay? What looked good here, rising, falling wedge, broke out, then it flagged, we broke up, right? Now, if you take a look, expansion, contracting, coiling, short-term bearishness, this could break down to the downside. It could be potentially a bear flag, bear pennant that's forming. Okay, not necessarily. We've got to see what happens in the overnight session. We could just get some crazy gap up. Just be careful with big gap ups, all right? If it's above the 5-day moving average, right, that's a good sign. Then you want to see it hold above there, and then you want to see this start to flatten out to go neutral. It goes bearish, neutral, and then bullish trend short term, okay? That's what we want to see. Same thing goes with the DIA. It's forming this same pattern. That's the industrial average ETF. The Qs, very same thing. Below the 5-day moving average, coiling up here tightly. Could be a potential bear flag. So we have some warning shots, right? So we have the NIAD, right? The advanced decline lines getting oversold. We have all these little short-term rising wedges. Here's the IWM. IWM is the same structure. However, it's above its 5-day moving average. It filled this gap on the gap down. It acted as a little bit of resistance, and it's below this volume shelf profile. Okay, so the IWM is looking something more, a little bit more healthier, right? But we'll see if it can hold. Okay, like I said, it's declining. It's starting to flatten. Then we want to start seeing it turn up, and then we start looking for opportunities at that point. I would like to see it do this. Okay, if you're bullish, right? I would like to see it potentially, bounce around, maybe break down, but recover, digest, okay, and all of a sudden this starts turning up and price is still around this 222 area. Then I would be playing a breakout of this 223.50 level right here. If it can do that and doodle around, and then pow, it could be a really explosive type move. Let's get into big tech. This is what we need to pay very close attention to, because the S&P 500, let's be honest, it's the S&P Fangman. That's all it is. Okay, these big, huge tech monster giants make up for basically just the largest, the biggest percentage of the S&P 500. So when they have bad days, the NASDAQ struggles. The S&P 500, it struggles. The Qs today, right? The NASDAQ 100, it really struggled today. It didn't struggle as far as a percentage point gain, but typically if you see everything rally, you'll see the Qs rally further. But Facebook was down 4% on the day, okay? This right here, if this was rallying with all the other big tech stocks, you would have saw the Qs probably go significantly higher today. Right? This is a huge move on a big mega cap stock. Why did I take a little shot here in the dark? I took a shot here in the dark simply because it's extended past the daily Bollinger Bands. It's been completely obliterated. This creates a lot of fear, a lot of panic. People do not want to step into this. I'm just playing it as an overextension move. I don't care if it gaps down way down to 315 and wipes my position out. It's all risk mitigated at that point. I bought in an option contract, so the premium's already paid for as far as I see it. But then you see this big volume here, and this big volume could be an exhaustion bar, which means it's flushing out everybody right there. There's huge trading volume flushing out, and I understand that there's news around the whole Apple and Facebook, whatever thing that's going on. I get it, but that's a very explosive move, and typically you can get dead cat bounces, and I want to be a part of that if we get it. If we don't, guess what? I lose a few $100s. Big whoop. Apple, okay? This one bounced, got to the lower Bollinger Band, is bouncing up. You got to watch all of this, okay? This one's also a pretty significant move to the downside. This is a correction. It went through a correction. That is a 10% pullback. This is probably a 10%, I don't even know what this is. So 385 down to 345. It's probably close, if not a 10% correction. I'm not too sure. Somebody would have to check on that. I'm not good with math right out of the top of my head. And then Amazon. Amazon also bounced, okay? And today it's still not out of the woods. And somebody from my Discord group called out, is a daily and inverse head and shoulders? And I was looking at the same thing, and it could be potentially not an inverse, a head and shoulder pattern. It's really in this period of distribution, accumulation, whatever. It's been chopping around, boom, 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 boom. But now I'm saying, okay, just be mindful here. If it starts cracking down below 3,200, that could get a little sketch for Amazon, which could put a lot of pressure on the markets. And then you have Netflix. Out of all of them, Netflix actually looks pretty darn good. This little inverse head and shoulder, it's above the moving averages. We exploded out from it. We did a nice pullback, right, on decreasing volume, and we're back above the 20-day moving average, and it's kind of flagging here. To be honest, if the market continues to kind of hold up, Netflix looks like a play that you can start doing some scalps with. It looks strong right now. Let's just say that. And then today it was up darn near 3%, so that's a pretty darn good day for there. And then Google, I mean, geez, look at how beautiful this trend is. 50-day, 100-day, 200-day. It's just like a perfect space between all of them, trending perfectly up, pulled into the 50-day, and now it's bouncing from that level. If this starts moving down to the downside, yeah, I mean, this is another monster that you want to watch out for, okay? But as it stands, these are just they're just pulling back. That's it. In uptrends, which is natural. You want to see a market pull back. Now, Microsoft is also a big one. And Microsoft has not really been phased by all of this market volatility. However, what I will say is the PPO has been continuing to decline here, and it's pulled back into the 50-day moving average, okay, as it's reached down to the lower Bollinger Band. So we're not out of the woods yet, but just look at the moving averages, look at the trend, it's still up. Now, if these start falling, if they start seeing pressure to the downside, if retail stops bidding these up with these short-term option contracts, and these are like all of a sudden, and the retail market could definitely move this kind of stuff. But if all of a sudden it kind of just loses its lust, if it all of a sudden starts rolling itself over and doesn't become the bellow of the ball, these big mega cap monsters are going to bring the market down. And then another one, obviously, Nvidia up 3% on the day. All the moving averages, look at it, bounce right from the 50, came down from the lower Bollinger Band, it's starting to rocket ship back up. I was tracking this bull flag right here, broke down, and now we're recovering. So this could have been a shakeout move, and we might continue on to new highs. So watch the market, watch it carefully. Keep in mind what we talked about from the short-term perspective. It is still bearish, has work to do. That's all I got for you on today's episode. Have a wonderful night.